what do you have next for us?
Well, this next case was, we're going to call this case the Bakery case, the Bakery Inc. And they had annual sales of also about $3 million. And this case was, I was brought in on a referral through the FBI's website that I was an expert witness in accounting forensics. The CEO had fired the vice president of his company, and he had this accounting bookkeeper. So he was trying to ask this bookkeeper some questions on what was going on, and she couldn't answer any questions. She couldn't, even reconciliation, she couldn't answer. So his VP of sales in the company, I do yacht racing with him out of Chicago. So he came to me at the yacht club and he asked me if I would take on this case. So we talked about it outside the office, and I said, all right, if you pay my fee, I'll give you 2 hours and I'll talk to the bookkeeper. So in 2 hours and 15 minutes with the bookkeeper, I realized that this was a serious problem. I ran back to my office, typed up the report of my observations. And while I was in the office, she started deleting files. And I asked her really key questions that she should have known she didn't know. But this case involved a lot of, I thought she was pretty smart. She was the person that told ADP how many hours to pay people.
Okay.
And she opened up the envelope from ADP when they brought the payroll checks in. Big violation there. And they used a really, QuickBooks as an accounting system, which was really a poor system. And one of the things she did besides write checks to herself, she wrote $563,000 for personal expenses, $99,500 for personal credit card bills. She increased her salary by $40,000 through ADP, and the vice president increased his salary by $100,000. The other neat thing that she did was they had an IRA that they could take loans out. So she loaned out her total IRA to herself and then paid back the loan with company funds. And the CEO was writing the checks thinking that they were just normal payroll withholdings, and he didn't understand that ADP did not have payroll withholdings for this young lady. So,
wow.
So this case ended up with, this was a $3.5 million embezzlement case, and I have some court documents that
you've just given me. Now these are the results, is that correct?
Yes.
Okay, and so yes, this is called a memorandum opinion and court order entered by a sitting judge after terminating accountant. That's the person that was doing all of these things. The client hired Larry Quiet, a forensics accountant employed by Quiet Financial Services, to review the client's accounting practices. On July 10, 2007, Quiet met with the accountant to discuss what financial information was on the computer and also the client's accounting practices. Is this the next?
Yeah.
These credentials, I have to say, are very impressive. The client seeks an accounting an order freezing the vice president's accounts and assets and preliminary and permanent injunctive relief. Client also seeks damages for fraud, conversion, breach of fiduciary duty, and other tort claims. So this is serious. This is,
Yeah, she went to jail for 4 years on a felony charge. He paid back, and he sold his home and paid back restitution to the company.
That is just an amazing story.
So again, this conclusion on this case was separation of duties again, and I know it's so hard in a small business of $2 million or $3 million that you trust this go-to person. And just on the news this morning, they were saying that they asked questions. There was a survey of how many people don't like their jobs. was 70% people polled that do not like their jobs. If you don't like your job, you're sitting there and thinking, what can I do? And the embezzlement occurs. So on this case,
Wow.
I felt that, again, separation of duties in a small office, you have to do it, you have to stick with it. And you have to tell the CEO every month, you've got to open up these envelopes and don't have them come to the bookkeeper. All bank correspondences should be directed to CEO. On this one case, this bookkeeper told the bank that we don't want any copies of any checks.
Oh.
And I thought, I said, and when I went right to the CEO, I said, did you say that? He goes, no, I never said that. So that led me to believe that something else. Also, changing of passwords, payroll separation of duties. Someone that would monitor hours called in and checks that were produced by a payroll processing company. Check the credit cards that your vice president and your accountant uses, and to see if that is the same as the CEO that says, pay my credit card.
Sure, the employee and the owner.
Off-site backup, I can't explain how beneficial that is to my clients when I told them to do off-site backup. But no one can get into the files and delete the files that happened.
Mm-hmm.
We ended up total reconstruction of the entire year, which took about 4 months of time. It was just incredible to reconstruct that client.
Just unbelievable. And just again, Larry, approximately what size client was this that we're talking about? This one.
This was an annual sales of $3 million. They had about 4 people in the back doing manufacturing, and about 3 or 4 in the office. So probably a total of 8, 9 people in the office.
Mm-hmm. Mm-hmm.
But the CEO just gave total responsibility to one person, and they ran with it.